we're starting off with MP Chambers for 5 minutes.
Thank you, Mr. Chair. Welcome. Thank you for coming. I want to follow up on actually a couple of my colleagues' questions, but first with Mr. St. Marie was talking about demand. Most people aren't willing to admit that to close the supply gap is almost fantasy land. So we have to think about demand. Now, you went down talking about population growth, but how about the uses of property? How many properties in Canada today are now used as, say, short-term rental? Does CMHC track that data? Does it have access to that data? Is that something it wish it had?
So thanks for that question, Mr. Chair. I mean, with respect to short-term rental, I mean, when you think about it, of course, those are units that are not available for, long-term residential uses. The counter side to that, though, is these are maybe units that wouldn't be built if the availability of short-term rental wasn't there in the first place. And so the higher returns to putting out a unit in short-term rental probably incentivized a lot of purchases of units that then maybe wouldn't have been built had that demand not been there for those units. So at this point in time, there's kind of maybe a potential windfall. If you were to sort of take those units and say, okay, we're going to get rid of short-term rental, that could increase supply to the rental market as a one-off, but it wouldn't necessarily lead to continued growth in supply in the long run because because the rules have changed and now the incentive to invest in those units is gone.
Indeed, totally agree with you, but I think we're at a point in time where everyone's acknowledging a crisis and a one-off release. I mean, there's some studies that suggest just in the city of Toronto alone, 10,000 units, because the city started to actually regulate short-term rentals, have been released to the market. But if you're telling me that the government doesn't have that information and would like that information, maybe that's something the committee could request. I'd like to hear from some short-term rental operators. These are individuals that are sometimes operating out of single-family detached dwellings. They're not all just condos. Yes, that's a part of it, and I'm sure that's a big piece. The second question, I'll just stick with you, Mr. Dugan, if that's fine. Do you have CMHC have any analysis on the recent changes to the building code or proposed changes to the building code from NRCan about how much additional cost that adds per unit to housing?
So I will say that we don't have any analysis that I'm aware of. It's not done in sort of the area that I'm responsible for.
Can I make a suggestion? We should want to know how much additional cost per unit is being loaded onto because of government regulation. Not saying where the regulation isn't needed, but we should understand and make the trade-off. We're talking about reducing the GST on rentals, and that's going to be so monumental change. 5% change. Some studies suggest that the NRCan changes are going to add $30,000 per unit in additional costs. I mean, that's a significant amount, which is all borne by the purchaser. So I would submit that that's a piece of analysis that would be very helpful for the committee. I would like to follow up on Mr. Blakey's questions about the CMB program, if I can, Mr. Morrow. Does the Department of Finance have any analysis or any projection on what will happen to prices with the injection of liquidity into the market?
Thank you for your question, Nicolas Moreau, Department of Finance. Basically, we're adding $20 billion in liquidity in the CMB program. This is a program of $260 billion right now. The Canadian market is a very liquid market, and these are AAA bonds, basically fully backed by the Government of Canada. So we don't believe that this will have an impact or any significant impact on the yields that are offered right now.
We are increasing liquidity, right?
Of course, yeah.
Okay. But you're also trying to wind down the CMB program. Is that not true at the same time?
Thank you for your question. What we've done as part of the last budget, we announced that we will be consulting the market on a potential consolidation of the CMB program on the Government of Canada bond program. Those consultations happened last summer. We're currently looking at the potential, the answers that we receive, and this is where we are right now.
Thank you very much. I don't have time for an answer, but I'd just like to make a request. Can the Department of Finance provide an explanation of what is going on between OSFI and FCAC OSFI's September 13th bulletin says that you have to go through the B20 rules, want to refinance. FCAC says you can extend amortizations. Those are at complete opposite purposes. I'd just like to understand what's happening. Thank you.
So MP Chambers, please.
Thanks very much, Mr. Chair. I really appreciate the candor. Mr. Duggan, I just want to leave one thing or an idea with you. 40 cents of every dollar today already goes into real estate. We have a productivity problem in the country. If we want to drag more investment dollars into real estate, that's going to create some other challenges. I would submit that we should be looking at the level of retail investment activity in the real estate market. If we want to stop that, you want to release houses. Forget about new construction for a second. Why do we still allow borrowed money for down payments? If we stop that today, we would wipe out a ton of retail investment activity and release units, already built units, onto the market. Thank you.